What's good guys, my name is Dima and today I will show you how I made $20,000 trading on Friday. In this video I want to show you how simple my trading logic is and literally anybody can use it. You just need to use it at proper timing and not to open too much positions. The first rule of trading is know when to enter and when not. The price on gold is always uptrending. So what we want to see is the price to go to the premium zone. For example, this is our trend. Like this, to enter these type of positions when the price is giving us the tests, some deep corrections. So we took our positions in the discount area, not in the premium. So basically what I want to see from the gold is how the price reacting to some POIs, like the point of interests. And the most vulnerable point for me is like the 4 hours fair value gap, which is consistently giving the price some reactions, and it depends how deep the price was in these fair value gaps. So let's start from here. We have the order flow confirmation when the price swapped the liquidity over here on this low, give us the gap, made another fair value gap and have a test. So this was a deep test of fair value gap, which was a fulfill. We can put it here, fulfill. And after this, we make the boss, the break of structure. So this is the continuation model. And what we are looking for is the longs. All we need is to get discount area so we can enter the position. So after we get these new fair value gaps over here, I want the price to test some of them and show me the reaction. If it's really strong and the price is planning to go long, we will have the fast reaction from the low or from the middle of this fair value gap, so we know how the price will be acting. So I go to the 15 minutes time frame and I want to see the price show me something like the order flow, something like the respectation of the fair value gaps, order blocks, but mostly I use only two instruments, liquidity sweep and fair value gap. So let's see. On the lows we have the liquidity sweep. After that we have some strong reaction, getting higher than this high and close here. So this is the fractal boss and this is the FVG which control us from going longs. So what I want the price to see is make some sorts of manipulations and close upper all this zone over here. So I don't want the price to stay too long in this area. I want the price not to move down. So first of all, we have the liquidity sweeps over here, FVG fulfill. So this is also like the fulfill of the fair value gap, 15 minutes. But I usually use 30 minutes. It's going to be easier for you guys. Like see how the price is actually acting here. Let's see. So here is the liquidity sweep first. Here is the liquidity sweep and the FVG fulfill second one, and here is the FVG fulfill number 3. So I was opening 3 positions. First position was opened straight after we swept the liquidity and make a fractal boss. So fractal boss means that the price wants to go reverse models, and here is like the high which bring us to this low. So this is the key high. And I want the price to break through it and hold here. So this was the first position which I was targeting absolutely all-time high, and I want the price just to continue going the same direction I'm planning. So after that we have the range here. What is the range? This is the accumulation of the price. When the price brings us to some point and start to accumulate here, we can show it like this as well. We want the price to break through the borders of this range, so we can see the trends of one side. And here is the deviation. So basically when the price starts to accumulate inside some boarding range and accumulating to the one side, make the divergence, and after this breaking through this middle point, that means that I can add some margin to my position and I can go long more, because this is a strong POI. I have the confirmation here. We all know that we are in 4 hours fair value gap, which is strong long point, and I want the price to close upper this border. So as we have here, I'm entering the second position like this and aiming all-time high as well. Actually, my entry was somewhere here, yeah? So this is number 2, because I see how the price is acting and I see that the price is so strong that we can go longs. But my third position was taken when the price respected this fair value gap over here. So let's see how it was. We have the 30 minutes fair value gap. Let's mark it 30 minutes, yeah? So this is classical time frame for the gold. It always respects 15-30 minutes fair value gaps. And I want the price to respect it inside this range, which was the POI in the previous trade, yeah? So I want the price to test it, get some sort of reaction from this equilibrium, from the middle point of this range, and after that, we are planning to go all the way high to the upper border and to the all-time high. So I was entering the third position like this. My stop loss was now at this point, because if the price was going down and bring us to this low, I still got 2 positions running. So I wasn't going B, but I don't want the price to act like this, because when we tested this area and when we close upper this border, there is no liquidity and there is no poise which we want to test on this area, yeah? So we are now planning to go all the way to the premium, and I don't want to stay here for a long time. So I was running all these 3 positions. They all bring us to the take profits. They all close by take profits, and here is some amounts on self-deposit. I'm sorry guys, it's on different language, but it's all $10,000+ on self-deposit. On self-deposit, yeah. So this was the XAU trade. Exactly, the XAU was going much more higher, and I could go like this and like this because I was aiming to go for the $5,000. And for sure, the economic situation and, you know, all the stuff happening around the world is bringing us to these prices, and it's logical. Maybe this week we'll have something like this, yeah, some areas which we can work with. We'll get the deep tests, sort of manipulations, and jump longs on continuation. Because don't try to reverse that is not reversing, yeah, wait for the confirmations always. So let's go my second trade, and it was taken on Euro USD. That was some sort of nice trades, and let's see how it was. So basically same logic, yeah. First I want the price to show me which side is planning to go. Here is absolutely visibly, visually understandable how the price is planning to go long. But let's see some sort of confirmations. So the first one is our price is not updating the lows, which is also a good sign for longs. Like, you know, this is the liquidity building, but we never know where the price is aiming to go. But what we know is these lows and these lows over here are strong points for the longs, because the price doesn't update them and doesn't sweep the liquidity here. So we know that the trend is upgoing. The second thing we want to see is some reverse models, so we can prove that the longs are correct. First is the liquidity sweep over here. This is the fair value gap that brings us. This is the fair value gap which brought us to this liquidity sweep. So I want to see the inversion of this. This is the inverse fair value gap, yeah? So this is step number 2, and here is the step number 1 for the reverse model. Number 3 is the boss, break of structure. So this is the last high which brought us to this low, and we want to see how the price break through it. So this is the boss. This is number 3 argument for going longs. And here is, as you can see over here, here is the argument number 4. Even in this little movement, there is so many ideas of going longs that I totally aiming for going longs, yeah? So here is this inversion fair value gap test over here. So this is IFVG test, which stays for strong point for going longs. After this, we have the order flow, one more 4 hours fair value gap test, and what I want to see now is the price to go long. Yeah, that's what we have here. Here is a new 4 hours fair value gap, and now I know that my target's gonna be these equal highs, because the price are so high, and this is such a strong move that I'm planning to go all the way high to this liquidity over here and absolutely to this liquidity over here. Yeah. So now I want to see how the price is acting in the discount area. So here is the Friday. Now I see how the price is trying to move all the way up to these highs. This was the first area where I fixed my position, and this was like this was the most secured zone and the most conservative take profit target. So I was aiming to hit this take profit. Let's see how the price was moving. So first of all, we got new representative fair value gap, which is the area of where I will be looking to go longs, because this is the strong area for going longs, like FVGs. And this is, let's open the sessions up. This is the London low. The London low. So the London session low is swept the liquidity of the Asian session low, is tested this 4 hours fair value gap, and is planning to go all the way high to these equal highs. So what I want to see now is the price close upper this session. So this is the Asia liquidity swap. This is the Asia liquidity sweep, and now I want the price to close upper this Asia low, so we can aim for something like a reverse model. We've got it here, yeah. So the price brings us to the middle point of the Asia with a strong movement, but then there was sort of many manipulations, and my position looked like this. I was aiming longs. I was bringing my stop loss here and my target over here. So this sort of manipulations was really deep, and I was a little bit afraid of the price hitting my stop loss, but whatever, like I would just re-enter. Maybe there could be some deep corrections to this area, but the logic remains the same. If you see the order flow, so like order flow of the 4 hours time frame, and you know how the price be moving after hitting this liquidity, also making the SMT on these lows over here, and doing all this inside this 4 value gap. So let's do like this, yeah? The first argument for going longs is price touched 4 hours FVG. Yeah, so basically when the price is testing the 4 hours FVG, that means that the reaction should be in this area. So all we want to see now is some more arguments for going longs. Second argument for going long is the Asia low LQ sweep. That means that the price after London's opening worked with the liquidity of the Asian session and showed us the reaction. And the second, and actually the third one, is the SMT with DXY, which means that the price also swept these fractals over here. This is additional liquidity, so this is the strong arguments for going longs anyway. And this is how I entered this position, yeah? And our target, for sure, and number 4, target is equal lows, equal highs. So when we know when our target is equal highs, we could say that the price is usually magnetic, this zone, and I want the price to hit there. Yes, there was sort of deep manipulations, but I stay in the position without opening like BE, without going, without changing targets, and I hit the take profit the same as in the gold. So let's go straight to this position. This position was taken yesterday, and this is how I work when the price is opening at the new weekly opening gap, which is absolutely normal for the Nasdaq and stuff. But let's see how I was thinking and how I was entering these positions. So basically when the price opens, it opens inside this daily fair value gap, and also this price, and also the price opens inside this weekly opening gap of the last week, which says that we opens in extremely strong area after sweeping this liquidity over here, yeah, after taking these fractals, after leaving all these buy side liquidity over here, yeah. So at the first, when I see the graph, I can understand which the price is opening inside strong long areas, the areas after the liquidity swept on the lows, and we don't want to do nothing on here. We want the price to go all the way up so we can bring us to the liquidity on the so we don't want to stay, we don't want to we don't want to go shorts. We are looking for the longs because all the arguments is saying, like, the first is new weekly opening gap opening, the price opening inside last week fair value the price is opening the last week new weekly opening gap, and the price is doing us, and the price is opened inside 1 day VVG. So this is two areas, and this is strong areas, so I'm planning to go longs, yeah. But how I'm planning to go longs? First of all, I need to understand how the price reacting to this new weekly opening gap, and I can see how the price is respecting this middle point, but still the strength of the price is so strong, the strength of the price is so big that we open in these strong areas, so I'm looking only for longs. And here is how I was entering these longs, yeah. This was my stop loss, and here was my take profit, yeah. So basically I understand that the price should go all the way to fulfill this gap. After that, I want to see some sort of reaction, yeah, maybe to the middle point. And after that, I want to see something like the order flow on the lower time frame, and I will be looking for longs again. So what I'll be looking now for, I will be looking for something like a discount area over here, the price to bring us all the way down, yeah, make some sort of manipulations, maybe bring us to some new formed fair value gaps over here, yeah, give us the test, and after this maybe swap this low, so it will be additional signal for going longs, and go all the way high. Yes, all the way to these highs and all the way to these highs, because all this is the buy side liquidity for me, and here's how the price respected. Yeah, so it's easy. Yeah, so this position hit the take profits, and it was kind of easy. Now I want the price to swap these lows and go long. And the last position I've took was Germany 40. I don't usually trade him, but I've been trading it like last Friday. So let's see how it was. Same logic. Yeah, absolutely the same logic. Let's just see how the price be acting on daily time frames. So what I want to see is, I want to see the liquidity sweep over here, yes, and I want to show you now the one more position in Nasdaq which was taking. And now the last position I've took on Nasdaq on Friday, and this was a perfect position for going longs. Here is some wrong marks on going longs and shorts, because I was trading on self-deposit, and here I'm opening like on paper trading just to see and to record the videos, so basically what I'm looking for, the same logic. I want to see some sort of higher time frame manipulations, liquidity sweeps, and see how the price is bringing us to some reverse models. So what I want to see here is how the price swept this 1 hour time frame low. Also, this is the daily low and 4-hour slow as well. So this is the fractal which contains a lot of liquidity by him, and what I want to see by the price is the reaction on this liquidity sweep. So this is the first sweep of the liquidity, this is the second one, and here is the reversal model. How exactly can I identify the reversal model? So what I want to see is how the price swept the lows. Yeah, so we're targeting these fractals over here, and after this bringing us to the boss, the break of structure. And exactly what I want to see is how the price come back to the discount area so I can enter longs. So the first long was taken after this swap of liquidity, yeah, and was aiming like here, and I got the stop loss. So this one was -1, yeah, but here after the price come back to this discount area, and I got the new low which was secured for me, and I understand that the price shouldn't come here because we're aiming to go longs. I was aiming to go longs like this after the price swept the liquidity, and we was aiming to go long, yeah, so it was easy. So after the price swept these lows, bring us to this inversion fair value gap, give us the boss, the break of structure over here, and after this we come back to the test. I was entering longs on the test of this fair value gap over here, and this is how I made $20,000. So, and this is how I made $20,000. And this is how I made $20,000 trading only self-deposit. And you know, the logic is still absolutely the same. The only thing is changed is the timing and the formations which the price bring us to. And the only thing is changed is the price. The only thing is changing is the price action and the logic of where the price is now. So you don't need to focus on some sort of models. You need to focus on the logic of the day. Like, where is the price now? Why it is now here? And where is aiming to go? And why? Because when you focus, when you stick to the system, and you know, you shouldn't be married to the bias, because you will lose so much opportunities and you will be focused on something wrong while the price is showing you absolutely different. So don't be focused on it, stay focused on the logic of the day. See how the price is acting between higher time frame zones, higher time frame levels. Don't look at the low time frames, only look when you're entering the position, and try to catch all the move. Like not the little moves and corrections. Try to go trend, so you'll be making more money. So thank you so much, guys. See you.